Hello everyone, hope you guys are doing great and welcome back to the channel. In my today's video, I'm going to discuss the Q4 FY26 and FY26 results for both Tips Music Limited and Havells Limited, right? So we're going to go through the numbers and try to understand the numbers, and I'm going to give you the main points which are going to be, which are the main catalysts for both the businesses and what is going well and what is not going well. Right? So let's get into it. So if you look for tips, right, for Q4 FY26, their revenue increased by almost 32% to 104 crores from 78 crores. PAT almost close to double from 30 crores, 30.6 crores last year to 59 crores. And their EPS jumped by almost 93% from 2.39 rupees to almost 4.62 rupees. And if you look at the overall year, the revenue did not grow at that high number. It grew only by around 21% to 310 crores. And PAT increased only by 30% to 216 crores. So these were the overall numbers. So let's look into the further details which they had provided in the presentation and which makes quite important reading. So one of the things that caught my eyes was related to content cost. If you look at the overall content cost for Tips Music Limited, right? If we compare the YOY for the quarter 4, right, it dropped by almost 55%, and for the YOY it dropped by almost 17%. I mean, which is quite good news, because you need to understand, right? For tips to create the content, they have to spend, but once that content is created, right, the the potential of earning the revenue is extreme. So they don't have to spend again and again to make that revenue. For example, right, let's say I have a course, right, I work hard for a week and I make that course, and I spend, for example, almost 50,000. But when I sell this courses online, right, people are buying it. No, whether 100 people buy, 200 people buy, 300 people buy, my cost will remain the same. So the more people will buy, the more I will benefit. In the same way, right, for tips also, once they create the content, their cost remains the same, but the potential of earning is quite high. So if when we see the overall content cost decreasing, it will definitely affect the bottom line, which is quite a good news. And the biggest news which has come for tips is from YouTube Shorts, right? So earlier, what used to happen for YouTube Shorts, right? The agreement between Tips and YouTube was that YouTube will pay Tips only a fixed amount for YouTube Shorts and nothing more than that. But what was actually happening, right? Most of their views for Tips was increasing on YouTube Shorts, but the amount of revenue was not increasing with the number of views. So which had created a problem, right? But now they have come into an agreement where YouTube will pay Tips on the amount of the view, which dramatically changes a lot of things, right? Because the more the number of people view on Shorts, right, the more they will earn, right? And if you actually see, right, the way the world is changing, right, and people's concentration are reducing, people prefer Shorts rather than going through the long term long videos, right? So this is actually a good news. And with this, right, they can, if everything works out well and the YouTube short views keeps on increasing for them, right, and things goes viral, they can earn a lot of revenue at the back of it, and their revenue as well as their bottom line will explode. So this was the overall result for tips. Let's get into the result for Havells, right? For Havells, if you look at the Q4 FY26 number, the number was not that great, because if you look at the revenue, it grew only by 2% to 6,705 crores from 6,544 crores from last year. Yes, in terms of PAT and EPS, if we see, there was a jump of almost 40%. PAT increased from 517 crores to 723 crores, and EPS jumped from 8.26 crores to 11.3 crores. But we need to look at the number as a whole, right? Because when we look deeper into this profit after tax number and the EPS, right, this increase in PAT is not at the back of the normal business that they do. It is back of a one-off profit. So if and the company has given the detail, right? So Havells had invested around 600 crores in a company called Goldie Star Solar Private Limited in Q1 of FY26, right? So at the back of it, they have generated a return of almost 283 crores, which they have taken as a profit for this Q4 FY26. And that is the only reason why that the profit has gone up so much. It is not at the back of the business. So one should not get excited about the profit. If the profit would have increased at the back of the normal business that they do, then it would have been great. And the other thing is, right, In Q4 they were expecting a good revenue at the back of summer because they have their electrical consumer will a brand called Lloyd, where through which they sell the AC. So they were expecting if the summer is quite high, then the more ACs were sold. But the management has said, right, that because the summer was not as hot like previous seasons and it was quite milder, so the expected sales that they were expecting did not happen that much, and because of which the expected revenue did not grow. And but overall margins were not impacted. If you look at their full year revenue, that was also not quite great. The revenue increased by only 3.3% to 22,466 crores. PAT is up by 14.5% to 1,705 crores. So let's look into the various business segment that they have and let's see how well they did, right? So they have quite a various segments from switch gears to cables to lighting and fixtures, electrical consumer durable and others. So if you look from all these segments, the biggest segment that the revenue that grew was from cables, which grew by almost 20.8%. So this clearly shows not just for Havells but overall for the cable industry that the demands for cables are increasing. The switchgears grew only by around 7.9%. Lighting and fixtures did not grow at all. The electrical consumer durable actually grew by almost 3.4%. And their other businesses, they had a good growth of almost around 25.2%. So if you look at it, right, they need to concentrate more on cables and the other businesses, and they need to hope that in Q1 the summer becomes more and more hot because that's when people are going to go and buy out AC. If the Q1 also the summer is not that great, right, it's going to impact their overall revenue. So in short, if you personally ask me, right, Havells is a good business if you look from that perspective. But if you're looking from an investment perspective, I would suggest no, because the overall growth is not there. And if the growth is not there, the stock will not do anything. Okay. And let's see how their Lloyd business does in Q4 FY26 and what are they going to do in the coming quarters or future to increase your overall revenue. And if you like this whole video, please do subscribe to my channel. Thank you and God bless you.